There we go. All right. So everybody, I'm live here with my good friend, Shayna Dickey. Now, for those of you who don't know Shayna, it's definitely a good person to know, especially if you're in the mortgage and real estate community. So a while back, USDA, who's known for their extremely low rates and their zero down home loan program, switched to doing not just regional offices, but now they have national teams. So I have a member of the national team who's actually based out of Olympia, Washington. She is here and she's joining me. She's a longtime friend and Seahawks fan. We have that shared passion. This is what we do. We watch Seahawks games together and comment back and forth and message each other. But she's just been a friend for a really long time. So Shayna, thank you so much for joining me.
You're welcome.
Now, are you in Olympia right now?
I am. I'm one of the, I think, 6 people out of 100 who's coming to the office.
Oh, okay. So they got you coming into the office. Are you?
Actually, it's my choice.
Oh, this one's your choice. All right. That's perfect. Okay. Well, I have a couple of questions for you, and let's just get right into them. So actually, before we do that, give me a little background because we were just talking about it offline. What all is your team in control of? Because I found this fascinating. This isn't something that I knew.
The region that we do?
Yeah, the region.
Yeah, I'm on team 1 of the national team, and we do pretty much the western half of the United States, including Alaska and Hawaii, plus Wisconsin and Alabama, which seems so totally random, but that's the way the numbers bear out. And the really interesting part about that is that I get to see, all the variations in appraisal values. And surprisingly, Alabama's is very close to what you might see here in Western Washington. But it's areas like Missouri or Texas that have the really low values. For example, I'm doing one right now that's in Nevada, and it's a 3-bedroom, 2-bath house that's in beautiful condition. And here you might see it for 300, 325. It's on a 7,000 square foot lot. It's close to 1,000 square feet. And especially up in Snohomish County, it would be a lot more than that even. But there it's 170,000.
Oh my goodness.
Yeah.
Oh my goodness. That sounds like a deal. How far away from the strip is that?
That I can't tell you because I'm not that familiar with their geography. But okay. I've done several loans for like 70,000, 65,000, and they've been decent houses.
Yeah,
blows
absolutely.
my mind.
Absolutely.
Blows my mind.
I mean, especially in that range. I mean, you're right. In Snohomish County, that would just be so. That would just. I mean, what do you think that'd be? That'd be like a $380,000 house still, right?
Exactly. Yeah.
Wow, and you're getting it for that much. Okay, well, for those who don't know, Shayna's been inside of the Guaranteed Rural Housing Program for around 20 years. 7 with the Guaranteed Program, which is basically, that's how you would get a USDA loan if you were going to see a mortgage lender. 7 with the Direct Department, which they have some different guidelines. We're not going to get too into it right now, but that's if you went directly to USDA. And then you worked 6 years additionally.
Also with the Guaranteed Program.
Also with Guaranteed Program.
Yeah.
Okay. Awesome. I just wanted to make sure I got them all.
Yeah.
Okay.
Yeah. So almost 14 years with the Guaranteed Program.
Yeah, that is a long time and a lot of lending experience. And one of the big things that I love about the USDA home loan program is you have the ability to do a zero down home loan. And they traditionally have some of the lower interest rates I've seen, some of the lower monthly mortgage insurance that I've seen. it's just a fantastic program. And there's some other benefits that we're going to bring out today. So I guess with that being said, Shayna, what do you think? I mean, you're on the side of the approvals. You get to see all of the cool stuff that the GRH program gets to do. What do you feel like are some of the benefits for folks who are looking to buy a home using the GRH program?
I think the biggest one is having the zero down payment. And that doesn't mean they can't have any assets. We see people all the time who have, I've seen them up to, $90,000 in assets. And of course, the first question I asked was, would they adopt me? But, they didn't, they didn't have to use that because there are 4 stipulations about that asset level. What can they also pay? Is that 20% of what they're purchasing? Do they have enough additional money to pay all their closing costs? Are their rates, their ratios 26 and 38%? And do they have the credit that allows them to go zero mortgage insurance on a traditional conventional mortgage? So say, for example, you have somebody who can do the first 3, but they can't do the 4th because maybe now they've got a 685 credit score, but they had a bankruptcy 2.5 years ago. Well, with that, they can't do the conventional because under the conventional guidelines, they can't get it without the mortgage insurance, right?
Right. Exactly.
Right. So ours is an all or nothing rule. So if they can't do all 4 of those, pass all 4 of those tests, if you will, then they can still have that 90,000 in their assets and still do zero down. I used to joke that the house I live in now is my 27th move around the world, lock, stock, and barrel, and as an Air Force brat and an Air Force wife, and there are no 2 windows alike, and you'll always have to buy new curtains. So got to save your money, right?
Exactly.
Yeah. So, and you mentioned we don't have traditional mortgage insurance. We have it's kind of a lender's user fee is what it is, but it's still 0.35% as opposed to FHA's
0.8 or 0.85. So it's
so,
more than double.
Right.
FHA is more than double what we see with the USDA program, and even the upfront funding fee is still significantly cheaper. Than
ours is just 1%, and ours is just 1%, and that 0.35 is prorated. So as the balance goes down, so does the fee. So
wow. Okay, so I mean, we know that you guys have the zero down program, and there's been so much that's been talked about with regarding location. Location is everything when it comes to real estate, and it is too with the GRH program. Can you talk to me a little bit about I know since you're taking care of the entire West Coast and Wisconsin and Alabama, it's probably hard, but for my folks that are watching out in Kitsap specifically, can you tell me where people can go to find out if their property meets the geographical guidelines?
Okay, we have a website that not only has the geographical guidelines, but it has the income guidelines. And that website is https:// and then no W's, the word eligibility, ELIGIBILITY as in Sam and Charlie, .egov.usda.gov.
Awesome.
And
we would be able to type that out and put that in the comments maybe after for the average person.
There you go.
I'll share it out because I'm going to be like, my eyeballs get big. I've got big fingers and I mistype everything I do. So always better to probably have the links. We'll definitely put those in there.
Okay.
All right.
But So for example, in Kitsap County, the income guideline for 1 to 4 household is $98,350. And for a 5-person household, it's $129,800. And that's an adjusted gross income. So say, for example, in the 1 to 4, you had a household of 4, mom, dad, 2 kids. 2 kids are in childcare. They actually make, say, $108,000 a year. But they also pay $1,000 a month for childcare for those 2 kids. So that's $12,000. You subtract that from the 108, and you are well below the 98,350.
Okay, so as long as you have, you know, and we'll talk a little bit more about credit score. It depends on the approval process. But if you're, say, like a 660, 680 credit score, you make less than $98,350, and you find a house in the geographical area, you can get a 0 down home loan, correct?
Pretty much.
All right. And is there a limit? Like, I mean, obviously, if you're doing it, I mean, can you buy, like, how big of a house can you buy?
As long as you meet the credit guidelines for your debt to income ratios and you meet the income guidelines, if you can afford it, you can buy it.
Right. So
we have done, say, in Snohomish County, we've done one. I have personally done one that was $638,000.
Right. So like in Kitsap County, for instance, the median home price right now is $409,000, like 409 and change. So that's about the average house that we see. So if we're looking at one of those houses and we see that, and you make under 93,000 or 98,350, if you can afford it, your debt to income ratio supports it, everything falls in line, and you get a GUS approval, you can buy that house, correct? 0 down.
Yep.
Awesome. Okay, so with that being said, we covered geographical requirements and all of that. What's something that you would want mortgage lenders to know right now? Because I know that there's a lot of program changes for us, like, you know, jumbo loans are really on hiatus, you could say. State bond is kind of in and out, and, you know, folks who usually don't fit in the USDA box, we tend as lenders to maybe look over at the state bond box, and they're kind of just up and down with everything that's going on with COVID-19, liquidity, all of that. What would you want mortgage lenders to know about the GRH program and when submitting files and things like that?
Our doors are open, you know, figuratively. The building doors aren't, but we are doing business, you know, full steam ahead. We've not seen really anything that affects us being able to do business. One of the good things that we've done, I guess, is that, you know, you're required to have tax transcripts before closing, except for right now, the IRS is only working with half staff.
Yeah.
And so you can't get those tax transcripts. So we're allowing people to go ahead and close, not having been able to get those, but then they have the requirement to follow up and get them as soon as they can. You know, so that's one good thing. If they're, you know, receiving paid time off, if they're receiving some sort of payment while they're staying at home right now, you know, if they're getting unemployment right now, this is not normal. This is something our country hasn't seen, right?
It's totally a different environment right now.
Yeah.
You know, we're not,
as long as your VOE is stating that they're coming back as soon as we can open doors to things, then just, you know, factor that in. It should be a very small factor considering, you know, what their pay was 4 weeks ago and what it's going to be, hopefully, you know, a couple of weeks from now. Then just, you know, move forward, because according to the reg, we see that any kind of small break like that, as long as they're coming back, we consider them still employed. So
Yeah, I mean, I think one of the biggest takeaways, excuse me, um, that I've taken away from the GRH program is the underwriting is very, very human. You know, you are able to have the conversation.
yeah,
You have letters of explanation. You know, where traditional mortgage lending, a lot of times it does feel like it lacks that. Where with with homeowners, or I'm sorry, with the GRH program, I've been able to write a letter of explanation or explain something for the client, or at least have the discussion. And as long as it's reasonable and logical, and also in the spirit of the program, typically you guys are really, really flexible down there.
yeah, and I had one just a couple of days ago, and I didn't understand why something was reported the way it was. I simply sent an email and I said, "Can you explain this to me?" She sent an email right back that said blah blah blah, and I went, "Oh, okay." And I finished up the file and issued the conditional commitment and said, "Go forth and close." So it was very, very reasonable, made sense. So I saw no reason to hold up the file.
Okay. And for real estate agents, because obviously they wear a different hat when it comes to this, is there any piece that you see where, you know, that you would give advice for real estate agents right now on these properties? Is it check the website for eligibility before putting it in the comments? Is there any feedback that you would give?
Yes, absolutely. Is it in the what we would call eligible areas based on the website? Otherwise, the appraisers that we use are the FHA appraisers that they use for any other property or any other program. So, is it decent, safe, and sanitary? And, as long as it's got 2 years on the roof, if
We're
they find
good.
it, they can buy it, kind of thing. Yeah.
Right.
It's a whole lot more liberal. We don't have that old, if they used to do the program years ago, we don't have that 30% site value requirement anymore.
Yeah.
Yeah, there's
That was a
no
big
minimum.
one. That was a big one.
It
And
was,
there was a
yeah,
lot of loans that didn't quite meet that. And that's just with what's going on with the population and things like that, and comps and everything. That played a huge factor into things why, some agents kind of wanted to take a step away from USDA. But now that that guideline's gone, I think with all the other guidelines changing, USDA is such an attractive home loan product. So if you are a real estate agent and you're in Kitsap County, if you're in parts of Pierce and Thurston County, if you are in Snohomish County, this is definitely something that you want to watch, because it will be more of a challenge. And this is just my own personal take, for the regular first-time home buyer to go in there and purchase a home. And I think that's another good point. You don't have to be a first-time home buyer, like never bought a
no,
house. You just can't own
no.
another. Like, go ahead.
Yeah, we actually have serial buyers. That's what I call them. They sell one house, so they close like on Friday, and then they purchase their next house on Monday, kind of thing. And they can go from one GRH loan to the next. They just can't have two at the same time.
Exactly. Let's see. I had another question for you, and it's, what's something that's surprising about the USDA GRH program? I know for me, the first time I had something that was just a surprise was when we didn't have appliances in a property, and I was able to finance in the appliances into the home loan because the appraisal came in a little bit higher. That blew my mind that we could do that.
Absolutely.
But I mean, for you've seen a lot of crazy stuff in 20 years, I'm sure. what are some surprising benefits that you think, some things that might jump out at us that we might want to take a look at, whether we're a loan officer or real estate agent or potential home buyer?
Well, one of the biggest changes that I've seen that, you know, might work for people is the changes in the whether or not an ADU is acceptable or not. And
Okay.
I mean, it used to be absolutely no way, not a chance, don't even think about it kind of thing. And then it it was, it kind of drifted a little, and now it's taken a huge step in that if the appraiser says it does not represent a second single family house, then it is acceptable.
Okay.
They have to use that terminology in the appraisal. But say, for example, you have some little something above the garage that's, a bedroom, a bathroom, a living area, a kitchen area, but the appraiser said it does not represent a second single family dwelling, then it is not. I mean, they may check on the first page of the appraisal that it is an ADU, but in the narrative they state it is not a second single family dwelling, then it is acceptable. We saw one that was a converted garage that was, 20 by 30 total. It was an ADA bathroom, a beautiful bedroom, living room area, kitchen. The kitchen had granite countertops and cherry cabinets. It was gorgeous. And it was even on separate meter and everything, but the appraiser said it did not represent a second single family dwelling, and that was that.
Yeah, I mean, I think we're starting to see that a little bit more in different areas, and I think that's part of the aging population. I mean, one of the things that we've noticed as a mortgage industry is that, mom and dad might be getting older. It's not really economically or it's not really economically or even just something that you want to do as far as going into like a retirement home or assisted care facility. So if you can get something that has an ADU unit, but is not a separate single family dwelling, it makes more sense to have mom and dad on the property versus looking at other avenues. So that is a really, really cool benefit. With regards to what I was talking about earlier, though, the financing of appliances, because I don't think a lot of people that clicks for them. The way that I understood the program, and I could be off, it's been a little while since I did that, but if the property didn't come with dishwasher and it had the dishwasher area and it didn't come with the refrigerator and it didn't come with the stove or any of those things, as long as the appraisal amount was over it, you could finance those things in, correct?
Yes, you could also do, let's say you're buying a house and it's a 1970s house and nothing has ever been done to it. It's not in bad shape, but just nothing has ever been done to it. So
I saw one of those on the market the other day.
Yeah. Tell the appraiser you're going to take out all the carpet and put in all hardwood floors. You're going to take out the original box store kitchen cabinets and put in all hardwood cabinets. You're going to take out the faded Formica countertops and put in, Corian or quartz or something like that. Make sure the appraiser does subject to these upgrades and what the new value is, and then those repairs can be done after closing with an escrow held back.
Wow.
As long as the subject to appraised value supports the cost of those upgrades.
Right. So That is just incredible. So if you're watching this and you're looking at houses and you're just like, you know, they've got original everything. By the time I own this house for 10 years, it'll be back in style, but I don't want it for right now. This is a great, great gem as far as knowledge goes of what you can do with the USDA home loan program. And I really do feel like this program is underutilized right now. It is something that I'm definitely going to be promoting on my end in my business, because I think first-time home buyers or just home buyers in general, they're missing the boat on this one. With that being said, I think my last question is, I know that the USDA approval process is a little bit different than the average home loan process. It means we've got to approve the loan as a lender first, and then we send it down to your team, the national team, for approval afterwards. What are your guys' turn times looking like currently?
I'm working on files that were submitted yesterday.
Right. So there's not a huge lapse, I think, is the message that I want to convey. Is it's not going to drag your closing out, 25 days, 35 days.
Oh, no, we're at 2 days or less.
Yeah, we're at 2 days or less. So 2 additional days of closing and you get all of this incredible value. You get a zero down home loan as long as you make under $98,300 in KITSAP in a 1 to 4 person household. Okay. Your upfront funding fee and your monthly annual premium in there is like probably half the cost or less than half of the cost of FHA. Yeah. And you get all these different benefits, which, you could utilize from the form of an escrow holdback to even having an additional dwelling unit potentially on the property that, if you have mom or dad on the property, it's a great, great benefit. You just have to fit inside of the geographical location, which is where we'll get that link so you can look it up. And just confirming, there's no like maximum loan limit. If you can afford it on GRH,
nope.
you can finance it, correct?
Yep.
And so just for my sake, I mean, typical debt to income ratio that you guys are looking at for approval? What do you guys see?
As long as there's a credit score of 680 or above, and maybe one other factor, and there's a variety that one other factor might be. We easily see 32, 33, sometimes 34% on the front end, and I've seen as much as 45% on the back end. The standards are 29 to 41.
Okay.
But, Gus does weekly algorithms that vary that all the time.
Awesome. Well, I know that you're probably super busy and because you have that huge region, but I want to thank you so much for your time. I really hope that a lot of potential home buyers do get to see this. I hope you're safe, and I hope we can get back to football soon, because we're hearing some really, really cool things. I know.
Yeah, I'm going to be real bummed if we miss our season.
I know. I keep thinking about it myself. They got the NFL draft in a couple of days, and I'm just sitting here like, please, football still be there in the fall. I need this. So I know you're feeling the same way, my dear. All right. Well, tell your husband I said hello. I hope everything's good.
I'll do that.
Thank you so much for your time, okay? I'll talk to you soon.
Thanks, Shaun.
Bye.
Okay, bye.